Good afternoon. Today I've got 3 tips for investing in dividend paying stocks. So this video is for some of my more advanced investing viewers, those who like to invest their money in individual stocks. And what those 3 tips are is that you need to look at the payout ratio, the current ratio, and the sector growth. These are important areas to consider if you want to put your money into an individual stock. Now, I don't recommend individual stocks to people. I don't recommend them to my following. But I will say that if you want to do your own research, these are some things to consider when you're looking at dividend payers. The advantage of dividend paying stocks is it's providing you income right now. They're generally more established companies. And since they have some additional cash, normally they can pay that to an investor as a form of income. So if you want income now, these are good investments, and they can also be reinvested to buy additional shares. But the 3 tips are to look at primarily the payout ratio. And what that is that's the ratio of their total earnings to the amount of dividends that they're paying. So if that ratio is 100%, that would mean that all the money that they earn, they're paying out in a dividend. And you want to look for a dividend ratio that's 50% or lower. And what that means is that they're paying less than half of their total earnings in a dividend. What that means is that the dividend is likely to be sustainable over the long term and perhaps even increasing. They may even increase it since they have some room to do that. The second is the current ratio, and that is on a business's balance sheet, right? A company's balance sheet. And what that tells you is that tells you how much cash and very easily liquidated assets they have compared to their short-term liabilities. So the short-term debt and short-term liabilities that they have to pay off. And you want to make sure that ratio is at least 2. That means they have twice as many current assets as they have current liabilities. That means that the company has a lot of liquidity and they can most likely pay that dividend without much worry on your part. And then the third thing is you want to look at sector growth. Now, this is different than a growth stock. A dividend paying stock is different than a growth stock. Dividend payers are generally bigger, they're more established, whereas growth stocks are generally smaller, though not always, and they have great growth potential, but they may not necessarily be paying a lot in a dividend. They may be reinvesting some of that money in their own company in order to grow. But you want to make sure that there's some sector growth in the stock that you're buying, whatever stock that's in, whatever sector that's in. And the reason that's important is because you won't want to be buying in an industry that's dying, because you know that even though it's paying a great dividend, it may have good earnings right now. That may not be the case in the future. And if you're not interested in investing in individual stocks, you can always buy a dividend paying ETF, right, which is a diversified portfolio of stocks. And if you're not as experienced an investor, that's probably what I would recommend for you to do. Please post a question or a comment. Send me a private message if you want to talk about it privately. I always enjoy reading your comments. And until next time, I wish you unlimited success.